Already. So when we think about what the news had been saying and what the chatter had been giving us, there was so much chatter about a Wednesday invasion that an awful lot has already been banked into the market, hasn't it? It's already been played out in terms of opportunity. So when we start thinking about that as part of the storyline, we start saying, well, wait a second, is that, if it's already been priced in? Well, it's obviously not been priced in. If they trundled across the border, the S&P would not stop from dropping for a good while. But when we start looking at the S&P's close yesterday, and we start asking the question, why was I so confident about buying the S&P, especially as we started to break some of the dealer levels on the way back out of here? Well, we go through the usual process of looking at the usual suspects. So we obviously can look at, for example, the VIX-M, VIX-Y, and we can ask the question, and we can see the VIX-M, VIX-Y. If we look at what happened in the background here compared to where we are just now, there's not been a panic about this, has there? A VIX-M, VIX-Y shows whether there's any hedgers on the short side of equities, and if there are, it's usually a very bearish picture, but there's certainly not brilliant, but it's certainly not a bad outcome either. It's certainly looking at that and saying, well, you know what, it's not bad. It's certainly got a macro bullishness about it. What else? Well, of course, we talked about the skew the other day. The skew is that volatility surface in some respects. When we think about the skew, we're thinking about the price of the outliers. What's the chance of an outlier coming in on the bullish side versus an outlier coming in on the bearish side? In other words, it's a probability. So in other words, if the skew is going up, the probability is the outlier is going to be bullish. What happened to yesterday's skew? What happened to yesterday's skew, guys? It went up on a down day. So yesterday's skew managed to rise on a down day. That's, in other words, it's reducing significantly the probability of a downside surprise today. No shit, Sherlock. So therefore, when you're looking at that, you're saying to yourself, well, that must have been real money buying during the course of yesterday into the close. I quite like this as a possible bullish reversal. I don't think it's necessarily bullish at top edges, but I certainly think it's bullish at bottom edges. And we can start playing into that as a storyline, can't we? There's the buy trade right there. Skew is a very, very important piece of information. What about the volatility of volatilities? The volatility of volatilities obviously gives us a read about the early skew information. When we look at the volatility of volatility, we can see that the volatility of volatility actually was going down. Blue line rising. And that gives us another buy opportunity. Volatility of volatility is obviously the chances of an outlier on the bear side should confirm pretty much to what skew shows us. And it does. So crazy good opportunity to take a little bit of a buy off the bottom edge. Let's see what happened to the rotation of the VIX against the VIX 9-day to see if all of that ties in with a rotation back out of 9-day VIX into 30-day VIX. Let's see if that changes. And wouldn't you just have believed it? The VIX 9-day, 30-day rotation is bullish at the bottom edges. So we can already start recognizing that there is a bullish bottom edge for the last 48 hours on the VIX rotations from 30 days to 9 days and backwards to 30 days. It's not bullish as in bullish top edges, but it's bullish as in bullish bottom edges. So therefore, when I tweeted out last night that I'm quite happy with two-way money now, a lot of people would be looking at that and saying, wait a second, what the hell are you talking about? We've got Russia's amassing 150,000 troops at the Ukrainian border. We've got chatter about a Wednesday invasion, and you're telling me it's okay to buy some equities. What the hell's wrong with you? Well, we were right. The market's gone up since then. The market called, I mean, we weren't right. The market was right. The value was right. The volatilities, rotations were right. They called, not us, they called the market bottom. They called the market going bullish. They called the market going higher. So it's not something that you're having to think, well, I'm the one that's going to call this. It's actually the market dealers. It's the actual guys that make a profession out of pricing the markets. They called the bottom edge. They called the market bullish. They were the ones that gave us the chance to buy into the S&P. And therefore, buying into the S&P yesterday wasn't that difficult. It was crystal clear, in fact, on every measure we could ever have on the screens. And the takeaway from today's session was we obviously took out the first overhead resistance on the London Open. We then took out the big dealer levels, and the market exploded after the dealer level got taken out. And that was us, bullish. Buy side equity, so crystal clear, it was unbelievable.